Good morning or good afternoon if you're on the East Coast, and thank you for joining our webinar today on new solar economics and SolarPACE financing. My name is Brandon Deno. I'm the Vice President of Solar at CleanFund, and I'll be your host. We'll keep this presentation relatively short and concise. It should be only 30 minutes, and we might have some time for questions at the end. If not, we'll follow up with you directly on any unanswered questions. I'll run through about 10 slides on the topic of new solar economics and SolarPACE, and then switch over to a brief demo of our SolarPACE Calculator. A couple of assumptions that I'm making based on the registered attendees today, and there are quite a few of you. Most of you are involved in commercial solar project development, and you have some basic familiarity with both CleanFund and SolarPACE financing. But just in case, though, it makes sense to do a brief introduction on CleanFund and SolarPACE. CleanFund was founded in 2009 by some of the early pioneers in PACE financing. We now have a team of 35 employees with a 100% focus on commercial PACE. As you might know, PACE financing is energy efficiency and renewable energy financing that is simply repaid with an increase in the property tax bill. It's important to note that CleanFund is a capital provider and not a broker or middleman. So it's actually money from CleanFund that we're deploying for our projects. We have national coverage with our headquarters in the San Francisco Bay Area. And our SolarPACE financing product has been developed specifically for commercial solar projects. Very simply, SolarPACE is based on a PACE financing framework, but has structuring and very flexible options with the ultimate goal of creating positive cash flows, positive yearly annual cash flows for almost all projects. As we know, unlocking the cash flows is the key for solar in general, and most property owners aren't going to move ahead with a solar project unless it makes sense and has good positive cash flows. To manage our solar business and SolarPACE product, CleanFund has several experienced solar energy professionals on our team. And 2017 was definitely a very stressful year for all of us here at CleanFund and anybody that's in the solar industry. We, of course, had some strong headwinds from the new administration in Washington, with a lot of talk for support for coal at the expense or in contrast to renewable energy that was potentially causing some instability in the grid. With that, there was a proposed change to FERC, Federal Energy Regulatory Commission, that would support coal power plants and nuclear power plants. There was also talks of cuts to the Department of Energy and other policy decisions that could negatively impact solar. Also in 2017, of course, we had the Suniva and Solar World trade case, which caused a lot of uncertainty in the market. Was going to have an unknown impact on future module pricing. At first, the proposal was a 78-cent per watt minimum price on solar modules, which would more than double the price. Because of all this, modules were in short supply, pricing increased across the board. And then towards the end of the year, we had tax reform and some uncertainty with tax reform. Would the ITC be eliminated, or would it be changed significantly? So all this made for a very stressful 2017. Good news, though, now moving into 2018 is that we have some certainty. We really kind of know where things stand, and we can get back to business as usual, hopefully. As far as those headwinds from the new administration, that FERC rule to support coal was rejected, fortunately. Also, just recently, FERC approved energy storage for grid resiliency. And now they're going to start a study on how to better integrate renewables into the grid. So that's very good news. Also, the Suniva and Solar World trade case has been settled. There's an expected impact of 10 to 12 cents per watt on module pricing. I'll talk more about that in a second. There's also the potential for exemptions for different product categories, which could help out some of the higher efficiency manufacturers in our industry. Tax reform has also been settled. The ITC has been left mostly unchanged. There's a potential modest impact to large international tax equity investors. That's really not an area that CleanFund plays in, so that won't have any impact to us and our financing. There's also, importantly, there's an improvement to the bottom line economics for end customer system ownership, and I'll talk more about that in a second here as well. So to provide a little bit more detail both on the tariff and tax reform. First, on the tariff, modules, it's important to note that modules are only around 20 to 25% of the cost of a complete system. So that 30% tariff will just be applied to that 20 to 25% of an overall system price. So this is expected to add around 10 to 12 cents per watt to overall system pricing. Actually, fortunately, much of this has already been built into the market with the rise in prices throughout 2017. So there's really, and I just saw an article this week that there's around 5 gigawatts of modules in warehouses in the US that were imported pre-tariff. It's also important to note that any increase to system pricing should be offset by the 30% ITC. So if it's a 10 cent per watt increase from the tariff, then really the impact to an end customer is only around 7 cents because you would discount for the ITC. Our friends at Alta Energy prepared this nice pie chart here at the bottom that puts the impact of the tariff in a graphical presentation. So on the left-hand side, you have pricing before the tariff, or the breakdown of pricing before the tariff. And then on the right-hand side, you have the little slice of the pie there that shows what they estimate to be a 6% increase to total system cost from this 30% tariff on modules. So as you can see, this is not too bad, and definitely not as bad as the 78 cent per watt tariff that it looked like we could potentially have. Next, a little bit on the impact of tax reform. A couple of key considerations for commercial solar project financing is that the top corporate tax rate was lowered from 35% to 21%. Very importantly, this increases the net full after-tax savings from a solar project. As you probably know, residential solar customers pay their utility bill in pre-tax dollars, or sorry, post-tax dollars, but the commercial customers pay their utility bill in pre-tax dollars. So essentially, the tax rate is a tax on the savings from solar, and so now that 35% tax on solar savings has went down to 21%. That significantly impacts the economics in a positive way, which I'll show here in a second. A little bit on the downside, though, is that the value of depreciation actually decreases a little bit with the reduction in the top corporate tax rate. Another important change, though, regarding depreciation was now 100% of a system's cost basis, eligible cost basis, can now be depreciated in year one. This is up from 40% that we had available for bonus depreciation in 2018. And then makers is still available, which would spread out the depreciation over the first 5 or 6 years if there's insufficient tax appetite in year one. So really you can see the kind of things have been left unchanged with the increase, though, to be able to depreciate more early, which would increase the net present value of depreciation, because now all the cash flows from depreciation can be captured in the first year instead of waiting out over 5 or 6 years. Next slide is really kind of bringing it all together, bringing the impact of the tariff and tax reform together into one analysis. And so what we did here is we looked at a system financed with SolarPACE Financing, because that's all we know how to do here. And so what we looked at was a system from 2017, and using our 30-year financing, this would be a direct ownership system where the property owner can use the tax credits and depreciation directly themselves. A 500 kilowatt system with a 1,500 kilowatt hour per kilowatt production factor, a $2 per watt pre-tariff price. So here you can see that the net present value of this project from 2017 was $605,000, and the 30-year total cumulative net savings was $859,000. Moving over now to the chart in the middle, this shows the impact of just the tariff. So if we were to add 12 cents a watt to the price of the system, finance it out over 30 years. This line graph here shows the cumulative savings every year, or the total cumulative savings throughout the course of the financing. The net present value goes down from $605,000 to $594,000. The 30-year total savings goes down from $859,000 to $787,000. So just with the tariff only, yes, there's a negative impact to the economics. However, when you add in tax reform, so this chart here on the right shows the impact of both the tariff and tax reform, the net present value goes back up to $597,000, which is higher than just the tariff only impact. Importantly though, the 30-year total savings, this is the net after-tax savings, the take-home savings, as we might call it, for the business is $981,000. Actually, you can see this is an increase over the 2017 solar economics. So in summary, from 2017 to now, with the tariff and tax reform, there is only a 1.4% decrease in the net present value of the solar cash flows. However, there is a 14% increase in the total cumulative savings, not discounted, over the term of the financing. So this is a mixed bag, but or it could be a positive depending on your perspective and how you want to look at this. So the good news, though, more good news, I should say, is that with SolarPACE financing, we can make the economics of any project, no matter what the tariff impacts are or the tax reform impacts are, look even better. And this is because a few reasons here, but first is SolarPACE has a very long term. We can go up to 30 years, which gives the lowest annual payment. That drives a net present value, makes the net present value as high as possible. We also have options with SolarPACE financing for utilizing the solar tax incentives and credits. We could, for example, we could finance 100% of the project upfront, so there's no out-of-pocket expense to the property owner, and then have a tax credit pay down. So finance 100% today, next year the customer can pay down the financing by 15, 30, or 45% to reduce their annual payments and make the project still cash flow. We also have a version of our product called the SolarPACE PPA that actually monetizes the tax credits and turns the tax credits into a 10 to 20% discount off of the system price. And then another way that SolarPACE can improve cash flows is that storage and other energy efficiency measures can be included in the financing. So we can do just one complete financing that can include solar, storage, energy efficiency, new roofing, new HVAC system, et cetera. And then we can also sculpt or structure the payments throughout the term to ensure positive cash flows. Before we switch over to a demo on the SolarPACE Calculator, I wanted to talk about some messaging for your customers, potential messaging for your customers. And yes, that is a glass half full of sunshine there on the right. So I'd like to say first, we shouldn't really buy in too much to all the negative headlines. There's been a lot of talk about job losses in the solar industry because of the tariffs. As you see, the impacts, though, are relatively minor. Tax reform actually has a greater positive impact than the negative impact from the tariff. As we know, costs in solar will continue to decline and have been continuing to decline, both module pricing and balance of system pricing, which offsets the impacts of the tariff. So the message for customers should still be go solar and start saving now. I always like to use the analogy of people should stop wasting the sunshine. Every day that the sun shines on a roof or parking lot, and somebody doesn't have solar panels there, they're just wasting that free energy that they could have collected. Some messaging for your customers on SolarPACE financing. The SolarPACE is long-term financing that stays with the property. So if they sell the property, the financing and this, as well as the solar system automatically transfers to the new owner. So the new owner gets the savings. With SolarPACE in the long term, we can deliver the lowest annual payment and the highest net present value of any solar financing option. And another way to think about SolarPACE financing is a switch from unpredictable utility bill electricity that's unpredictable and maybe dirtier energy to clean and predictable electricity that's simply paid on the property tax bill. Okay, so now I want to switch over and provide a demo on our SolarPACE Calculator. This is a tool that we created a few months ago after many requests from our partners. It's a very simple Excel-based tool. It only requires a few basic inputs that can be pulled from solar modeling platforms like Energy Toolbase, Aurora, or others. The output is, as you can see here, is a simple executive summary and cash flows over the term of the financing. This can be shared directly with your customers. You can export this as a PDF and share it with your customers, or you can just copy and paste the numbers and put that into your own proposal or own presentation. Okay, with that now, I'll switch over to Excel here and show you how our calculator works. Okay, so to navigate the Excel file, there's only 4 sheets. The first is an input sheet. Second is an executive summary sheet. The third is a detailed cash flow sheet for solar-only projects, and then we have a detailed cash flow sheet for solar+storage projects. Going back here to the input sheet, you can input basic solar and property information here on the left-hand side. If you would like to input more advanced solar project information and energy storage project information, you would uncollapse these cells here. But to keep it simple for this demonstration, we will just show you this view for now. So here you can input the name of the customer. This will appear on the executive summary and cash flow sheet. You can input the size of the system. So right now it's a 500 kilowatt system. Let's just say that we change this down to 400 kilowatt system. Nice thing about this is you can see real time on the right-hand side the impact to the economics. This first bar graph here on the upper right-hand side are the pre-tax cash flows. So the orange bars are the annual payments. The blue bars are the annual estimated utility savings. If we do a solar+storage project, the storage rebates will also appear as part of the blue bars. Below that, we have the total cumulative savings with tax benefits. So this is the fully loaded after-tax cumulative cash flows over the term of the financing. So, okay, going back to the inputs here, so I changed this to a 400 kilowatt system. Let's just say we change this to $800,000. You can see that lowered the annual payments. We would, right here, the next input would be for the annual production from the system in kilowatt hours. So let's just say that this produces 600,000 kilowatt hours in year 1. And then you would also put in the year 1 bill savings from solar. So let's say that this is $80,000 bill savings in year 1. And then down below, and then you could also put your O&M costs, because that will help model the full economics. So we'll just leave that at $12 per kilowatt. And then here you have the expected commercial operation date. This is important because we show the cash flows on a calendar year basis. So if you put this in as July 1st, you'll have half a year of cash flows from solar. If you put it in as April 1st, you'll have 3/4 of a year of savings from solar. So we'll just leave that alone. This section 2 here is just a quick reference that shows you what your annual payment, I'm sorry, what the installation cost would be, and what the production factor is, and what the value of solar. So this is, you wouldn't make inputs here. This is just based on the inputs that you put in here. So again, if you change this to 500 kilowatt system, you'll see here that changed the price per watt down to $1.60. It changed the production factor down to $1,200. It's just this section again, it's just a quick reference to make sure that you're putting the right numbers in this first section. So now the next section, financing. This is the real key to SolarPACE, is the flexibility and the different options we have to drive positive cash flows. Out of the gate, we had this set at 30 years, but if you click here, you can select different term options. So let's say it were a 20-year financing instead. Now you can see what happens is the payments went up, but payments stop at year 20. while the savings from solar continue throughout year 30, because we all expect solar PV systems to last 30+ years. You can see, though, the cumulative savings here. In the early years, you get the tax incentives, but then it's kind of flat throughout the rest of the term until you get to year 20, and then the savings increase. So this one might not look ideal. Maybe we'd go back to a 25-year term, which has kind of increasing cash flows for the throughout the term, essentially. Let's say the customer, though, wanted to have a shorter term, but we wanted to try to improve the cash flows with this shorter term. So this is where we get into other options we have. So if the property owner doesn't have a tax appetite, we would select no here. And what that's going to do is it's going to model a SolarPACE PPA. It's automatically going to calculate the discount. It ranges, again, between 10 and 22%, depending on the price of the system and some other metrics. But this also gives a nice increasing cash flow graph here at the bottom. But let's put that back and say that they do have a tax appetite. Another option that we have here is that we could escalate the payments. So if we escalate the payments, what that does is it lowers the payments in the early years. We can go up to 1.5% escalation rate on the PACE payment. You can see here that gives you more cash flows pre-tax in the early years, but payments increase over time. Put this back at 0. Another option that we have that really is useful for a lot of projects, especially when there's a very low utility rate or a higher installation price, is that we give the property owner the ability to pay down the financing with some amount of the tax incentives. So again, we would finance 100% of the system price today, so there's nothing out of pocket. But then next year, they would have the option to make a higher payment of 15%, 30%, which would be the full ITC, or 45%, which would be approximately ITC plus depreciation benefit next year. And what that'll do is that will lower the annual payments going forward. So let's just select a 15% pay down to show an example here. So you can see here that lowered the annual payments and improved the cumulative cash flow. So instead of having that kind of flat cash flow from years 2 through 20, when you use the tax credit pay down, we have increasing savings. You can make that even more significant with a 30% tax credit pay down. Let's go back here to no. Okay, so those are some of the options that we have to drive positive cash flows. Want to show you a little bit more here in the advanced solar section. So when we click on that little open there at the top, or that little cursor there at the top, this section opens. You can change things like the annual production degradation. That will impact the amount of kilowatt hours that you get in the savings. You can change the O&M escalation rate. You can change the inverter replacement year, inverter replacement cost. Here's where you have the option to change the federal tax rate. So if we go to the 35% tax rate, you can see that has a big impact on the savings there, because those solar cash flows are effectively taxed at a higher rate. Let's put this back at 21%. All right, and that looks a little bit better here for the cumulative savings. We also have the option to model depreciation either as 100% in the first year, or using maker's depreciation over the first 5 years if they don't have enough tax appetite to use all of the depreciation of that first year. You can select the discount rate here for net present value calculation. So if we change this, say, to 6.5%, the net present value increases from $518,000 to $545,000. And then we could also put in a cap rate. This is for commercial real estate owners, and this is a metric that's often considered in commercial real estate. So you can put in the cap rate for a property in an area, and it'll give you an increase to the net operating income and the value of the property. And then this next section here below is the energy storage project information. And I'm not going to go into a whole lot of detail on that, but I just want to show you really quick. If you were to add an energy storage system to the solar project, you would click yes here. And kind of out of the gate on the right, now you can see what happens here is you have the utility savings are higher for the first 12 years, and that's because we picked 12 for the expected life of the battery system. But what happens, and also this is a California project where there's an SGIP rebate paid over the first 5 years. And so you can see that the utility bill savings plus the rebates are higher in the first 5 years. Again, that drops then at year 12 when the battery system effectively stops working, or when you stop counting on the battery system to work. The downside, though, here is that you have payments that are higher than savings when you get to year 12. So for the property owner, this doesn't look ideal. And what we have, the creative option we have to solve this is that we can sculpt or structure the payments to match the savings and rebates. So now this cash flow profile looks much better. So there's still savings in the early years. There are savings in the later years. The cash flows increase steadily, cumulative cash flows increase steadily over time. If you have an energy storage project, it's definitely best to reach out to CleanFund. We can help you model the project. Let me switch this back. Okay. Help you model the energy storage project. It can be a little bit complicated, and we'll help you get it right. And that also applies to any of these solar projects as well. You can plug the numbers into the SolarPACE Calculator, email us the file, we'll take a look, make sure that the address is good for PACE, and then also check all the inputs are correct. We only have a couple more minutes here, but I just want to show you a couple other features of this calculator. This is the executive summary page. Those graphs that we saw on the inputs are also here on the right-hand side, both the pre-tax savings and then the post-tax cumulative savings. The left-hand side here, we have immediate cash savings. So we show when the commercial operation date would be, what their utility bill savings would be before the first payment, when they would actually make their first payment, and how much that payment would be. We show the cash flows over the first 5 years of the solar project. Because of all the great tax incentives, the cash flows are very significant in the first 5 years. We also show here the long-term value generation from this solar project. We show the cumulative savings. We show the net present value based on the discount rate that was input on the previous page. And then we show the increase to property value based on the cap rate that was also input on the previous page. Then the next sheet is the detailed solar-only cash flows. So on the left-hand side here, the blue sections, we show the benefits. So utility bill savings, tax credits, interest tax deductions, O&M tax deductions. Then we show the costs, the PACE payment. This here would be where the optional early paydown or the tax credit paydown would appear. We show the O&M costs and the tax impact or tax adjustment for the bill savings, and then the net cash flows here. So again, you could export these two sheets, executive summary and detail only, and share those with your clients. If you put in your name as the solar project developer, it'll appear here, or you can just copy and paste this into your own Excel file or whatever other presentation you want to use for the customer. Okay, looks like we have just about 1 minute left here. And looks like there are a few questions, but don't necessarily have time to go through those. There is a poll here, and if you could take a couple of minutes to complete this. Basically, we're just asking, what would you like to learn more about? And then how often would you like to hear from CleanFund? Weekly, monthly, daily, never? Feel free to give us the full feedback here. And looks like we're out of time, but thanks again for attending the webinar today. We hope that you appreciate the positive message that we shared for the solar industry and how CleanFund and SolarPACE is ready to help you deliver winning projects to your customers. And we look forward to hearing from you and helping you with your solar business in 2018. Have a great day.